Hi there traders, this is Steve Miley, the market chartist for FX Explained, and this is our regular weekly macro watch update looking at the main geopolitical, fundamental and macroeconomic events that have shaped the market over the past week and looking out into the week commencing the 8th of June. Well, our headline here is V-shaped stock rally extend. Is the global economy following? So we've been having this strong recovery in global share indices in here, US, Europe and Asia, and the big question has been, is the market getting ahead of itself? Can the global economy follow suit? And the data in here over the past week has certainly started to indicate that there's potential for a V-shaped recovery, a strong recovery in the global economy after the significant damage that was inflicted through the first quarter in the wake of the global spread of the COVID-19 coronavirus. So first of all, we're going to take a look at the macroeconomic and geopolitical developments over the past week. And the key real driver in here over the past week has been the early June economic data pointing to a potential V-shaped economic recovery. We had the Institute of Supply Management US data for Purchasing Managers Index and also the Global Market PMI Purchasing Managers Index over the past week, in most instances significantly beating expectations. So all of that looking very, very positive for the recovery in the national economies and the global economy. And the real icing on the cake was the non-farm payroll report, the employment report from the US on Friday, which posted significant upside surprises, with the unemployment rate coming at 13.3%, with economists and strategists forecasting 20%. And the non-farm payroll data was expected to fall 7.5 million, a loss of 7.5 million jobs, but came in actually adding 2.5 million jobs, a rise of 2.5 million jobs, 10 million, beating expectations by 10 million in here. So a huge swing in both those pieces of data compared to the consensus, compared to the expectations. On the policy front, we've had further progress in the EU recovery fund being passed in here, the 750 billion euro EU recovery fund. And also on Thursday last week in here, we had the ECB committing an extra 600 billion euro to the Pandemic Emergency Purchasing Program, the PEPP, the PEP. So both of these, both fiscal and monetary policy in here, supportive of the Eurozone recovery. And not only that on a Euro-wide outlook, but also Germany agreeing fiscal policy stimulus of 130 billion euros last week, equivalent to 4% of GDP. So the Eurozone as a whole certainly being stimulated from a monetary and fiscal policy standpoint. And we're already seeing strong encouragement in the UK and in the US as well from both those standpoints, fiscal and monetary policy. Global tensions remain high, however, between US and China, and also not just US and China, but China and a lot of the globe in here. Australia, UK, parts of Europe, tensions rising between China and the rest of the globe. And also internal tensions within the US with the whole Black Lives Matter protest in here over the past week or two. So all of that could be detrimental to the global recovery and national recoveries. However, at the moment, not having an impact on stock indices and not having an impact on data. In fact, markets just really kind of to some extent ignoring the potential negative impacts from these global tensions. COVID-19 death tolls continue to ease in Europe and the US, although in Latin America we are seeing significant rises. In some US states as well, seeing significant rises. But generally speaking, Europe doing fairly well in here, Europe and the UK and most of the US, as death tolls and number of cases are on the decline as Europe and the US and Asia in here comes out of lockdown. Let's take a look at the global financial market developments that we've seen actually impacting on financial markets. So European equities particularly doing well in here over the past week. We already had a rally from the middle of May through month end, breaking out through from the April-May consolidation ranges. But here we're looking at the German DAX, a surging rally over the past week, reinforcing the late May breakout in here, and now taking back important resistances that pertain to the whole March bear move, that acceleration in March that we saw as COVID-19 coronavirus spread out of Asia into Europe and into the US. Similar story with the S&P 500 launching higher through late May into early June. Strong end to of the week, very aggressive move higher, V-shaped recovery pointing to still further gains. The S&P 500 now closing in on its all-time high posted back there in the second half of February. Risk currencies in the forex space doing well. The Australian, New Zealand and Canadian dollars all rallying against the US dollar. The Australian dollar surging over the past week in here, and you see getting close to the late 2009 cycle high in there. So that's going to be an important target at 0.7032. And then also we've seen European currencies, the euro in here versus the dollar, a surging breakout rally over the past 2 weeks in here, much more firmer tone for the euro, again being helped by that monetary policy and fiscal policy stimulus that we've seen in here within the eurozone, and the pound even doing well despite the backdrop of potential negative talks in here on the Brexit front, the Brexit trade deal. Despite not too much progress on those talks, the pound's still doing well against the dollar. This is really highlighting weakness in the US dollar. But the dollar not weak against the yen. The dollar yen we saw breakout in here, having been in a confined range between 107 and 108 in here over the past few weeks. Dollar yen broke out to the upside last week, taking out some notable resistances, coming up towards the 110.00 level in here, and that really underlying a weak yen, underlying the global risk on theme. The yen, the weak currency amongst major currencies in here, but the dollar just behind the yen with its weakness, and then even the euro and the pound strong, and as I say, risk currencies doing very, very well. A quick look at the base metals in here, and copper breaking out to the upside through last week, and a surge at the end of last week on Friday, underlying the whole recovery effort that we've seen from March and the more bullish tone in here over the past 2 weeks, and then again underscoring the global risk on theme. Oil also a beneficiary in here, pushing higher. Let's take a look at the week ahead, the week commencing the 8th of June 2020. Well, first of all, our central bank watch, we're looking at the Fed. We had the Fed on Wednesday. How are they going to react to the better data? Will they acknowledge the better data? Will they acknowledge the strength in the stock indices? These are all going to be key points, but at the moment we're expecting the central bank, the Fed in here, to remain very, very accommodative, continuing to support both the economy and markets. On the data front, we have Japanese GDP and German industrial production on Monday, EU GDP Tuesday, US CPI, followed by that Fed meeting, the FOMC meeting and press conference on Wednesday, the weekly US jobless claims data Thursday, and then we end the week off with Eurogroup meeting on Thursday and an ECOFIN meeting on Friday. Also on Friday, we get the UK industrial production and GDP data. I'm going to wish you all a great trading week out there, and please do be safe and take care. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.